All right, let's jump right in. Today we're going to peel back the layers on Bitcoin's market behavior. You know what often looks like total chaos? Well, we're going to look at a really powerful on-chain tool that shows there's a hidden structure to it all and how the entire system is actually designed to reward one specific trait more than anything else.
So if you've been around the Bitcoin world for, any amount of time, you've probably felt this. It's like there are two completely different realities happening at the exact same time.
On one side, you've got the world of short-term trading. And let's be honest, it's all noise, it's emotion, it's chaos, and for the most part, it's really inefficient. But then, on the other side, you have this world of long-term accumulation. And that's all about structure, conviction, and patience. And you guessed it, that is the side that the system seems to reward.
Which brings us to the big question, the one that kind of changes how you look at everything. What if all the volatility, all the crazy price swings, what if that isn't a bug, but a feature? Maybe even a test? What if this is all part of a system that has a very, very clear purpose?
And that's where this amazing tool comes in. It's called the HODL Wave, and it lets us see this hidden system in action. It just cuts right through all that daily noise and shows us what's really going on under the hood.
So what is it exactly? Well, to put it simply, the HODL Wave is basically a chart that groups every single Bitcoin out there by its age. It keeps track of the last time each coin moved from one wallet to another. And by doing that, we get to see the true sentiment of the market, not just the noise from daily price changes.
The HODL Wave really splits the supply into two main camps. First up, you've got the new coins. You'll often see these in hot colors like reds and oranges on the chart. These are coins that are less than 6 months old. They get traded a lot, and they pretty much represent all that short-term speculation and market noise. And then, you have the old coins, shown in cool colors like blues and greens. These guys haven't moved in over a year. They're basically just sitting there, protected. They've been effectively taken off the market, and they represent real, long-term conviction.
Okay, so let's see how this all builds into something bigger. See, the journey of a Bitcoin from being new to old isn't just about waiting around. The idea here is that it's a mandatory promotion cycle. Your investment actually has to earn its stripes.
And this quote just nails it. The system isn't set up to reward the smartest trader, the one with the quickest reflexes. No, it's designed to reward discipline. It rewards the ability to just hold on through all the madness.
So let's walk through this whole promotion cycle. It's got 3 clear phases. First, the cadet stage, then the liquidity lock, and finally, you become a realized veteran.
Every single journey starts right here in the cadet stage. So if you've been holding your Bitcoin for less than 6 months, hey, congratulations, you're a cadet. And this is where your trial by fire really begins.
Now, during this stage, you're at your most vulnerable. You're super easily swayed by panic selling, those huge dips, and of course, FOMO rallies. And why is that? Well, it's because your conviction just hasn't been truly tested yet. Your mission, should you choose to accept it, isn't to time the market. It's simply to survive, to override that gut-wrenching emotional impulse to just sell.
Now, if you can make it through that cadet stage, you get to enter Phase 2, maturation, or what's called the illiquidity lock. And this is where things really start to change, not just in your head, but on the blockchain itself.
So as your coin gets older, past that 6-month mark, and heads toward 1 year, your conviction gets stronger. You've seen some serious volatility, and hey, you're still here. Crossing that 1-year threshold, that's your official promotion. And get this, here's the reward. Your coin literally changes categories on the blockchain. It's no longer seen as a speculative risk to the market. Instead, it starts to contribute to what's called illiquidity, which actually helps push the price higher for everybody.
And finally, we arrive at the veteran stage, the old coin. We're talking about Bitcoins that have been held for 2, 5, 7, heck, even more than 10 years.
The people holding these coins, they're just a different breed. They have been through it all. We're talking multiple, brutal bear markets and crazy, euphoric bull runs. Their supply isn't just conviction, it is realized conviction. It's been proven over and over again.
Which, of course, brings up the big question. After all that time, after surviving so much, what on earth finally makes these hardened veterans decide it's time to sell?
Well, it's not panic, and it's definitely not a reaction to market noise. When an altcoin finally moves, it is almost always a carefully planned strategic decision. The goal isn't to make a quick buck. It's to realize generational, life-changing wealth.
And right here, this is the kicker of the entire cycle. These huge, calculated sales are what provide the liquidity for the next wave of new buyers, the cadets, to flood into the market, usually right at the peak of a cycle. The veteran sells to the speculator, they exit the system, and in that moment, a massive transfer of wealth happens. And then, the whole cycle just begins all over again.
So, when you zoom out and you look at this entire system, one thing becomes incredibly clear. There's really only one asset that truly matters in this whole ecosystem.
You know, the community's had terms for this forever. Weak hands and strong hands. The weak hands are the cadets, the ones who trade emotionally and sell their new coins. They provide the liquidity. The strong hands, they're the veterans, who absorb all that supply, hold until their coins are old, and only sell for strategic, life-altering reasons.
And that's the fundamental law of the system, really. The entire HODL Wave cycle is basically just a giant, perpetual machine that is specifically designed to transfer wealth from the impatient to the patient, from the weak hands to the strong hands.
So what's the big takeaway from all this? Well, the path seems pretty clear. First, you have to accept that the cadet stage is going to be volatile. Second, you prioritize accumulating over trading. Third, you secure your Bitcoin, turn off the noise, and just wait for your coins to earn that promotion.
So, while everybody else is obsessing over the price, just remember that the real currency in this world is something else entirely. It's unshakable conviction. Because at the end of the day, that is the only thing that guarantees you graduate from the system.